Hello and welcome everyone to the weekly Delphian meeting. Thank you for attending. Um, so what we're going to go through today, we'll do kind of a quick market update. We did a very in-depth one last week. Wanted to see what your guys' thoughts were.
That actually means there's real numbers. What does it all?
See what your guys' thoughts were, on the new lows metric that we started pulling. So after that, we got a bunch of earnings stuff. So we're in the height of earnings season. So that's going to be the majority of the call here. So let's get into the market update. Hey, who's that guy? Okay, so we go through. You can see we're back up in, this is an actual record number, 73.24, higher than the one we had before. So this is just that market that is not quitting. Yeah, it just keeps on chugging along. We're at 82% overall in bullish states and about 18% bearish states. So if we kind of look at that market pulse, we can see we had a little bit of dip here down in the 60s, and now we're back up above 73. So you can see that's another record high there. Previously we had 73.1. So, and bounced back quick, obviously, went up to new all-time highs, and we're down to like 5% in state 8. So I went through a bunch of the presentations, as far as previous market tops and things like that. And that's posted on the share drive. I can post that link in there. We're not going to go through that whole PowerPoint again, but it's there for you guys to reference and, use as, I guess, historical analysis and, things you can add to as far as, trying to look where this market's going. I've become a big fan of this new lows metric, and we're pretty much flatlined here still. We can go out, the last one we get up in the 200s, but we're pretty much flatlining on these new lows. So I think this, aside from a steep drop in these state ones, which I think we've had a few instances of that, basically where it just falls off a cliff. The last move that it did, it wasn't like a steep drop. So I think that's kind of what we just have to, guard against is, if it's dropping like, 4.2, barely, that's not indicating some kind of drastic pullback, which, we're so overbought now. That's what we're all kind of worried about. So I would think, two things we got to look out for is, the steep drop in state ones with a concurrent, movement in the state 8s, or these lows start spiking. I think this would probably give you a clear indication. You pop up from, I think we're at 37 new lows yesterday, 40. So we're pretty much flatlined. So I think this would be one of those two things will be the indication when things could get a little hairy for the market. But until then, it's if we're flatlined on this, we're not, no one's making lows, then that's just telling us the market wants to keep creeping higher. So we'll look at SPX. Previously when it hit the all-time highs, it dropped down, tested target 3 here, and that had turned into support after it tested it here. So it tested it again and then just took off. Last week we talked about the range being, okay, if it can make new highs, that's a good thing, or it may test support here. So obviously made new highs. So, this level up here would be something that you're looking at as far as, again, a temporary support. I also kind of pulled up the 50-day SMA, which you can see going through here, it's been pretty good support. You had a few dips below, and this is from, the coronavirus lows here. So it's only dipped down below there twice, but it's tested it a bunch. So I'd say this would be your closest support, 3750, which is above our target 3, and that's shown right here on the chart, 3750. So I think that would be your next kind of level of support, and then obviously that target 3. It's turned into pretty strong support here, since the beginning of the year. So SPX, it's still, until we see kind of, drastic turnarounds, it's going to keep creeping higher until we start seeing some new lows. I don't see, I think that's what we have to guard against, as far as the move. So the Russell, this has been leading and it continues to lead, making, strong moves. So, this could be, the thing that, it's so far off of, our targets here. It's just been so, had such a strong move that, this isn't really telling us much other than, it's very bullish. So I think we got to kind of key on the SPX at this point. And, this one just continues to lead. So, that's kind of where the markets are as far as that. The VIX, we had that spike, came right back down. We're still right around 20. So, we talked about this, like almost every week here. The normals are low teens, 12, 13. And, since we started this coronavirus, we haven't dropped below this 20 level here. So that just tells us that something else is still priced in. We don't know what. I'd kind of turn to the market pulse with checking this kind of daily. Looking at the percentage in the states, and then the lows, I think, is going to be a key indicator. If we see some kind of move where it pops up a bunch, not so much little blips where it's moving, like 100 or some, like drastic moves like this. This is what we want to guard against. That was really loud. So that's what we kind of want to guard against here. But VIX is back down to state 8, but it's just not moving below 20. Until we get back, excuse me, until we get back to those low teens, I still think this market has something priced in that we're not certain about. So, and we talked about that a little bit last week. Maybe it's, once everything gets back, everything opens up, at that point, maybe we'll get back down to the 12s, things like that. So, so that was a quick overall, market update. I know Shawn had a lot of earnings stuff, so I kind of wanted to go through this. I did want to see if anyone had questions about, market analysis. Any comments on the, this new lows? Anyone else done any kind of research on this? I'll open up if you guys have questions or comments on that.
Hey, Josh, this is Lee. I've got a question.
Yeah.
I think Dave brought it up last week. It's what are the factors now, and this is open to the group. What are the factors that can make us fall off the cliff? Because sometimes I get caught by surprise and go, oh, I should have thought of it. And I didn't. And I think one, unemployment were to jump, or coronavirus gets worse, but actually it's looking a lot better today. The coronavirus infections and deaths, those types of things. But I'm wondering what other people think that could make it fall off the cliff. So I can kind of keep my eyes open for that.
Yeah, I mean, the one thing that I think is kind of driving us higher is, things look like they're starting to, some states are starting to open up a little more. So if everyone starts opening up, I think that would be, that's definitely going to be bullish overall for the market. I also think they have priced in, stimulus and, God knows what else they're going to put in that package. But I think that's also part of what's priced in right now. So, shocks to that, I think, would be, um, any, shocks to those kind of expectations, I think could be the impetus. But, um, it's tough to say, but yeah, a lot of the times it just, something will just pop up, or, you just run out of buyers. At some point, but obviously there's still a lot of cash on the sidelines, but are they going to put that in the market? It's hard to say. I can't say exactly. If I knew that, I wouldn't be sitting here. So, that's just my thoughts. Anyone else have comments on that?
Yeah, I'll throw one in. Somebody else mentioned this a couple weeks back too. I can't remember who it was, but I think I would not be surprised if the down move that kind of hits us out of the blue, and we don't really see it coming. It just happens one day. And I think that might be a result of all the unbridled enthusiasm waning to the point where, we just don't see masks coming off, even though a large portion of the population is getting vaccinated. But there's still strains out there that are showing up that are, slipping through, and we can't really tell you can stop social distancing and wearing masks. And when people that are playing the open up trade today realize that, well, that's might get pushed out a lot back further than anybody thinks, even though we get a lot of vaccinations. I think that culmination will produce a day or two or a week that it's like, well, there's some selling, because like we thought we'd have free and easy travel by now, but then social distancing would be relaxed. But it didn't get that way, because we really didn't get all the population vaccinated, and there's new strains that are still showing up. That's what I think will happen, and we won't know it. I think that's to answer at least. I don't think there'll be an event on a calendar that we can pick for that to happen. I think it'll be like you just said, Josh, running out of gas on. Well, all the fear of missing out money is now in somewhere, and there's no more buyers. I think you're kind of on there, right on spot.
Yeah, and I mean, if you look at the, like I laid out kind of, a bunch of past corrections, and this one mirrored, if you go back to that one, it was just like there was no warning, and we can go. I think, if you can go back and look at the news on that date and see what happened, this could be something, some Fed official opens his mouth, who knows, but it honestly, I just think, they're gonna, run out of buyers at some point, and need to, pull back, and then, get fresh. But when that happens, I don't, I just say we kind of, track this, the new lows, and the market pulse. You can watch that key level for SPX. If it closes below that target 3, I think that'll be a good indicator. It holds below there a day or two. But yeah, I just kind of watch these, and until you see things start to spike. I mean, you may get caught off guard where it's just one big day, but those happen. So yeah, I just kind of, if you're in the market, I just plan for that kind of gradual higher until you start seeing any kind of these indicators. But knowing that we're extremely overbought, yeah, I just take that in. um, you know um, as far as, how you're playing this market right now. I'd just be a little cautious, that we are so overbought.
One other question to you, Josh, on the Russell specifically. I mean, the Russell's had a really good run here, and I guess what I'm kind of thinking in my mind is, I remember all those sessions that we had back when we were having visiting down at your office there,
Yeah.
and the Russell was just hanging out doing nothing. And
Yeah.
now all of a sudden, for like 1 month, it's like a month and a half maybe. It's like taking over. Do you think we have some like coiled up, pent up demand for small caps that just hasn't had enough time to unwind because it was stuck in that range for so long? That's kind of the feeling that I get there.
Yeah, obviously this is like a breakout, kind of scenario. We were talking about, that 1600 level, I think was what we were talking about, kind of here, where it tried to get up there, 1603, turned around, popped up, and then, from there, November, basically the election, which is kind of, interesting, but, yeah, so that 1600, so I mean, it's kind of like, it's been ignored for a long time. So, it's been lagging.
Yeah, keep going back a little bit, because I think that's what I'm seeing here. You see that 1600 level? It's just like it was there for such a long time.
Oh,
It's
yeah.
almost like all the money was going in at that time that the indexes were going up, were going into those few NASDAQ stocks or that were mega caps.
Right.
That's where all the money was going, and none of the money was going into the Russell. While I'm looking at this whole flatline graph back to like July of 17 almost.
Yeah. Oh, yeah, definitely. I mean, that's pretty much, flat, like in good economies, the small caps usually lead. So, that's what this is telling us. The small caps just like basically went exponential here after it broke out of, this multi-year range. But, they have been lagging everything for a very long time. So I guess, it's just a breakout, and you can see how fast it moved. But yeah, I don't, most of that money was going mega caps, Facebook, all those type companies that are just piling money in there. So, the money, obviously there's a lot of money going into here, into the small caps, and how long that continues, we'll see. But it's definitely leading all the other indices right now, including NASDAQ.
Hey, Josh,
Mhm.
how would you determine a particular stock is way overbought? We're talking about the indexes and everything else, but if we want to look at a particular stock, say, oh, this is way overbought, consider it, would it be the RSI? Would it be some other indicator?
Yeah, I mean, I don't know if I have specific criteria that I'm comfortable saying. I think you can look at a lot of things, but I don't think there's one set of criteria that I'd be willing to say this is going to be overbought. I think that's something that we can use the system for. Obviously, if it's a lot of the times I kind of look at that state one, and when it's having problems with target three, that usually is a good indicator. And you can use pretty tight stops. If it's having real problems getting over that state one target three, as long as it keeps closing below that, that's a good indicator of it's overbought. And if it gets above and closes above that after a couple days, then that would be your stop loss, basically. Okay, now it turned into support. As far as that T3, as far as other indicators, I just I can't say that I have any specific criteria that I'm comfortable saying, oh yeah, this is definite indicator. The tops are tops are the toughest, in my opinion, to call. So, yeah, I don't know if Shawn, if you had anything.
Yeah, I was just trying to look up some stuff as well, and I don't really have much. I mean, the RSI I think is the standard of what a lot of people use, but I agree with you. I think it's hard to. Sometimes they can give you some false signals, especially in a market environment like this. It seems like it's hard. Those tops are just going to be near impossible to predict, in my opinion, as well.
Yeah, I mean, I've been trying to find a good bear strategy for over 4 years. So, yeah, I keep working, but nothing yet. These
Because I
moves,
mean, yeah,
these moves
yeah,
are so
like
drastic down too. So,
like you say, some of these stocks, like I was looking at that Virgin Atlantic, trying to look at that to get an overbought. I mean, it was at $9, after COVID, $9, and it went as high as 62 the other day. So you're like, wow, okay. Stocks like that, you would assume they're overbought, but then they just still continue to rise. So how far can it go? I mean, it's hard to tell.
yeah, and I mean, a lot of a lot of those stocks that don't really have fundamentals, like no earnings or whatever. God knows, like it's at the whim of the investors and how much they have. There's no PE you can even look at. So so those can be tough. I mean, the tops. So
And
yeah,
what I was going to mention too is, obviously Shooks went over this before in the past, in some of those meetings that we had, those seminars, and using that hedging portion within the platform, the hedging to try to find some of those ETFs that maybe hold big positions within stocks, maybe that you're long, or positions that you might want to try to test some hedging on. So, use the platform to see if you can find some good hedging ideas, and then even if you're not hedged in your portfolio 100%, right, which is pretty difficult to do, but even if you're able to hedge it where you're not taking as big of a loss if it does come, suddenly, which I mean I think everybody's kind of assuming it's going to happen, it's just when, but maybe being able to add some puts in there or some other type of positions to help kind of minimize those losses at that time might be the prudent thing to look for.
okay. Yeah, that's a good question, Russell. We'll if anyone has criteria, obviously send it to me. We can test it. I've done a ton of testing trying to find tops, and nothing solid yet that's like worthy of a study. So I can get in the 60s, but not up in the 70% win rate. So those are tough. So obviously like the market, just trying to find the directions and where things are seem to be trending, and looking at those support levels as far as the state targets, I think is the best solution we have right now. Cool. Okay. I think it's sorry, I got something in my throat here. So, all right. I guess that's it for market update. Shawn, you about ready?
Yeah, I'm ready.
Okay.
So yeah, well, thanks guys. Yeah, I'll go over some of the earnings stuff. Stuff we've been talking about. We're pretty much in the heart, of the earnings season now. So we still have, the rest of this month and basically most of March to still have some of these earning trades come about. So I kind of wanted to give you an update of, where a couple of the different strategies stand from my perspective on, the vol crush trades, and then Bob in Dallas, he sent over an update for his trades as well in the bullet pre-runner. So I'm going to kind of give you guys an update on that as well, and you can check some of these out. Let me share my screen. So let's see. So I have the vol crush currently. I'll kind of show you what I have as results for the vol crushes right now. If you can see the trades versus the results, and there's about 37 trades that are gonna be available. 37 trades for the vol crush trades that are going to be available for this quarter. About 18 of them have already come off, so we still have about half of them remaining to be able to put out there. But here I'm just pretty much laid out in this little section what we're looking at for the vol crush trades right now. So currently I'm on a total profit of about $6,300. Total risk 83,000, and my total credit's 55. So a total risk would be if I'm doing the iron butterfly trade and there's basically 20 points of risk on both sides, that's going to be $2,000 worth of risk. So $2,000 worth of risk, and then I take into my credit, and basically my credit would be this. So I'm looking at the difference between my credit and my total risk to actually get this value here of my actual risk on the trade, so the $28,000. And then we can see based on my profit versus my actual risk, the return's about 23%, currently using about half the trades that have come out, and still the other half pending, just based on the earnings release dates. These results do not include the Google trade, which was from last week, and General Motors, which was from this morning or yesterday. Earnings come out this morning, but the trade would have been put on yesterday. So those two will come in, and I'll have an update for those at the end of this week, or for next week. Google, my break even on Google was right around the $2,000 mark, and Google's right at 2080 right now, so $80 above my break even. So unless something dramatic happens over the next couple of days, that one probably will be a max loss, but we still have a couple of days in there to see if it pulls back a little bit. Even if it pulls back $80, that'll get to break even, which would pretty much have the trade flat, which would be better obviously than where it is right now. General Motors, I think they had fairly good earnings, but then they opened up down, or they started selling off a little bit. 54.25 is the current price of General Motors, and that trade was actually around 56 to 51. So we're pretty much right at even on that trade right now. With the market, with it being down actually 3% from last night. Earnings were pretty good, so I'm surprised it opened up down a little bit lower. But I think the market was a little bit worried this morning on some news that had come out. So the market as a whole seemed to come down a little bit as well. So I'll show you the vol crush trade. Like I said, I still have it in the virtual portfolio. So I just want to make sure that we're using the virtual portfolio if we can to test the ideas. Use it for yourself so you can check these things out. Here's my vol crush virtual portfolio. So we'll see we have General Motors in there, and we also have the Google still in the trade as well. So all in all, currently still up about $3,000 or so, $3,700. I use $100,000 portfolios we've talked about before. I try to keep my risk about the same on all these trades. Some of them are a little different and difficult because Amazon, some of those Amazons, Teslas, things like that, those the expected moves are bigger, so my risk is going to be a little more on those. But I wanted to try to keep it level so we can kind of see the trades as a whole. And later, if we say, let me get the real example of just risking 1,000, I can kind of take those trades out and we can make the analysis based on it as well. So we can see Google, this was as of close of last night. You can see Google position values like 96.15, negative 96.15. The most I can lose is $10,000 on the trade. So I'm about $385 away from max loss. So no reason not to hold this thing until expiration on Friday if I have to, because basically my potential reward is exponentially greater than my remaining risk at this particular point in time for this trade. So again, General Motors, I had that in there as well. So that one's just put on last night. That's why I didn't have a gain or a value either. So just wanted to show you that those trades are in there. I hope everybody's using it. If you have any questions, using the virtual portfolio, please, reach out to me. Let me know. I can try to help you set some of these things up. We do have some, we do have some trades coming out, over the next, couple days, over the next couple weeks for the vol crush trades. I think we spoke about, Walmart, some other companies that might be lower on the lower side of the expected move. So those would be great ones to put into this portfolio and track yourself, so you can kind of see the trade through to the end if it's something that you actually don't want to live trade. So that would be a great one to do. Just make sure you're kind of coming into these, coming into this earnings plan every day and kind of checking the trades out, see what trades are coming about. Make sure you're looking at this. This is where most of the changes that you're going to see with the dates come. We also do have, our pre-alerts come out every morning. We've changed that to 10 o'clock, so 10 a.m. Those pre-alerts will be coming out, so you should be receiving an email if you have the alerts signed up. Those will come out at 10 a.m. And again, you can kind of jump in here, see the alerts for the day. And then we're also working on setting it up to where we can see these volatility crush trades, these non-mover type trades, the iron butterflies, which should be put on in the afternoon. We're trying to push those out to where you get those at 3 p.m. Eastern time. So it kind of pulls in the data for the strikes based on the move of that particular stock during the day. You know, so stock like Google or Amazon, some of the other stocks that might move a little bit more, they can move quite a bit intraday. So if you're looking at your strikes first thing in the morning and the stock moves 5% intraday before earnings, your strikes could be way off. So we want to make sure we're pulling in this data, you know, around 3 p.m., 3:30 p.m. Eastern time, if that's when you're putting the trade on for the iron butterfly, just for these volatility crush and the non-movers. So those are the two that you want to make sure you're doing in the afternoon. But you know, obviously, always check the plan. Again, we have the pre-alerts coming out, so those are going to be great. 10 a.m. is when the first set, you should get a notification for that particular day's trades. And then we're looking to get that 3 p.m. Eastern time one set up as well. So, you know, use those, and again, use that virtual portfolio. And I just want to, you know, I haven't heard anything from anybody, so I just want to make sure if you are using it. And again, any questions, you know, please reach out so we can kind of get it set up for you. We still got, you know, half of the quarter to go. And then, you know, probably within the next 30 days, you know, Josh and I are going to kind of start working back on, you know, Q1 for 2021. So we want to make sure if there's, you know, any issues that you're having, you know, maybe a lot of people are having the same issues or any questions that you have that we can, you know, try to cover them, make sure we're covering them with the setup of the new plan so that we make it smoother. You know, every quarter that we're doing this, we're trying to make it easier and easier for everybody to use and everybody to follow. And, you know, I think we still have a little bit of work to do, but we want to make sure that that it's user friendly as well. So, you know, that being said, I wanted to show you guys, this is from Bob. So, you know, the ball crush stuff I'm following pretty strategically. I'm trying to follow everything else too. There's a lot of trades there, but this is from Bob. Bob sent an email over, and you know, Bob's trading the 90% all the way to 100% win rate. So if the trade had at least a 90% win rate when we did the back testing on those bullish pre-runners, he's been trading them. He has been trading a one lot, so a one lot of everything. You know, if the stock, I believe, and if Bob's on, he can correct me if I'm wrong, but you know, if a option is $250 and the next one's $750, he's still doing a one lot of the trade just because he is kind of testing these trades out. But he's doing the one lot, again, 90 to 100% win rates. His total profit so far has been, or his profit so far has been 6,000 minus the losses of 1,500. So his total profits around 4,500 bucks. He has a total average invested of about 8,000. And, you know, he says basically some of his losses are still open. So some of this $1,500 in losses or positions that are still open have time on the options for them to trade out. So those losses could be minimized a little bit depending on where the stock moves after, you know, after this report had come out. And his return basically 56% return over 45 days. So, you know, I think some of the losses are key too, because that's kind of runs over to the vol crush and some of the other like bearish pre-runners or bearish runners I've been looking at that are, you know, at a 90% or like 100% loss almost, and the options still have 30 days on them. You know, if they're at that much of a loss and you still have a lot of time on those options to go, you know, it's not, the probability is probably not on your side, but the potential for those stocks to rally or those stocks to sell off to help the value of those options increase over that time frame is still there. So, you know, that could dramatically change the results based on the particular stock movement. But yeah.
Hey, it's Bob.
Yeah, Bob.
I wanted, there are a lot of different ways to figure profit. That number 8,000 is, it should be a lower number, but I didn't want to get carried away with the numbers I was presenting. If I was going to do it accurately, I would create a log of the ending daily balance in the account every day and then take the average. 8,000 is actually the peak that I had invested at any one time.
Mhm.
It ranged between, I think early on it was 2,500. Today it's $2,350. So the reason I bring this up is I think I'm noticing right above that you're using the denominator of 83,450 for your total risk, I'm guessing you didn't have 83,450 invested at any one point in time. Is that correct?
That's correct. Yeah, because those vol crush trades are a little bit different, right? Because the total risk isn't my actual risk, for the lack of me using the better word, right? My actual risk would be this amount here, that 28,000.
Got it. Okay.
Because of based on like the credit that I receive, right? So they're a little bit different because I'm receiving a credit, so it kind of shifts it around a little bit. And I think I did it right. And if I didn't, please let me know. But yeah, that's your actual total risk, the 28,000 on the vol crush.
Is that your phone, Shawn?
I don't think so. My phone's off.
Yeah, someone is giving feedback. Sorry.
Does that sound right, Bob?
The reason I didn't respond is because I'm not yet to the point of understanding your trades. I'll work myself into it over time, but for my first shot at this, Shawn, I wanted to stick with long calls, one contract, everything the same. It's kind of like having training wheels on my bicycle.
Right. No, I understand too. And yeah, the vol crush trades that I'm doing is completely different. Kind of some reverse thinking there when you're looking at it based on these numbers. So it's definitely different. No, I completely understand. And like I mentioned in my emails, we do appreciate you. Obviously we want you to do the trades and make money, and we're glad you're making money on the trades. And then, above and beyond that, we're obviously appreciative of the fact that you're willing to share the data with us so we can share with the group as well. So yeah, I'm not criticizing anything on
I'm
those.
thrilled to make 56% in 45 days. If I can do that 4 times a year, that's marvelous. I mean, that's
Right.
wonderful.
Right. And that's what we were talking about earlier with Josh and Joe was, returning 23%. I mean, that's great. If you can get that, in a quarter every year consistently, I mean, you're doing great. And then you're double, 2.2% or 2.2 above mine, so you're doing a lot better than mine based on that. And the trades are a lot easier and less intensive as well, typically. So yeah, and like I mentioned, I mean, I think some of these trades we can definitely improve. We can improve kind of our earnings analysis based on our back testing feature, and some of these trades that are more consistently, profitable or more consistent than the others. And I think, that 25% profit, might be able to be adjusted a little bit. Maybe we can be a little more aggressive with these, or, if we're doing a 2-lot, scale out of 1, and it's running the stops, like a trailing stop's a little bit difficult. I haven't been able to, affect it, but I think on some of these where that volume is crucial on those options, that might be a valid possibility. But Bob, do you know about how many total? I know we looked at it together one time, but do you know about how many total trades there were that were the 90% or 100% winners? I mean, win percentages.
The only number I can give you is, well, I can give that to you. Hang on just a second.
If you don't
The
have
total
it,
number of trades that I've taken so far. Total number of trades that I've taken so far has been 53.
Okay.
The 100%ers were 32, and I didn't take all of them. There were some of them that, on a discretionary basis, I didn't want to take.
Right, understand.
Usually when I didn't take them, I was wrong, by the way.
Right.
And the 90%ers look to have been about 27.
Okay, so 50, or yeah, a little more than that. Yeah. Okay. Yeah, because there's some, right? I think Workday maybe was one that was a bullish pre-runner for today. I think it was Workday, right? And I mean, I pulled up a chart of, that stock, and just on 1/28 of this year, January 28th, it was at 223. Now it's at 274. So that stock's moved up, almost $50 over the past week and a half, and you're still expecting it to gain more based on that bullish pre-runner strategy. It doesn't mean that it's not going to happen, but when you see a move like that over a short period of time, you're like, wow, this stock could easily be exhausted on its move.
I'll add one more thing, and then I'll mute my mic. But I had kind of come to the conclusion that there were trades that I should not be taking. And as I mentioned, I was doing it on a discretionary basis. And frankly, in many cases, I was just getting it wrong. So I've looked at a couple of other non-Delphian resources to help me qualify a trade before I take it. For example, one that I looked at showed current trend. Well, yeah, you can pull that out of a chart, I agree, but it was nice to be able to pull it out of a watch list. So I'm looking for that second source of information to qualify a trade past just the back testing of 90% or 100% win rate.
Right, understandable. Yeah, and I think that's great. I think I use that a bit too within Delphian and other places as well. I'll try to find other factors like we've talked about before, of using different patterns within Delphian or different indicators that might signal, one versus the other, or maybe one's better than the other. So, I think those are great, and a lot of people use additional resources from other providers that they have other signals set up on, like proprietary signals that they use on other platforms, and they kind of incorporate those within Delphian as well. So I think
Well, I'd love to see you add a couple of columns to the calendar that showed a couple of metrics that you think help with this decision-making process, so we could see it in the calendar view without having to dig for it.
yes, I haven't found anything specifically that I think seems to help dramatically yet. I'm still trying to run that analysis. So just to speak freely, real quick, I don't know if I still have it up. I don't have it up, but I can pull it up in a second. Where, for some of the ones that might be our bullish, let me go into the plan real quick, like our bullish runners, so, or our bearish runners. So for instance, I think I might have talked about this before. I'll pull out some companies that might, have earnings come out this week or next week. And then I'm looking at, for these bearish runners or these bullish runners, I'm going to go and I might look at, okay, well, when earnings, so let's say earnings comes out on 2/9 for this well tower, 2/9, the earnings come out after market close. So 2/10 is going to be the earnings day when the stock is trading based off of earnings. And then 2/11, we have the bullish runner. So on 2/10, I can go in there and see, okay, well, what did well tower report for earnings? Kind of what's their projection, and kind of read a little bit more into their report if I wanted to do so. And, if their earnings blew, they're expected out of the water, meaning it was, they were expecting to make $1 and they reported $3, then I might say, okay, well, that gives reason maybe the stock will rise. And is their forecasted earnings going to be that well? Also, what's their future look like? And then I might go into state modeling and look at state modeling. And, if I pull something up and let me think of one that I looked at the other day. If I pull it up then in state modeling, and maybe it's shown some signals like Josh talked about, where maybe that target 3 is a little bit support and it's kind of bounced off that target 3, does that provide me an indication that this thing might push a little bit higher? Has it, is it going to run a little bit further to the upside? So those are two things that I might use, Bob. I haven't found any that seem to work better than the other, or at least give me an indication of say, hey, this is a good metric to use. But I think if we collectively can come together and find some stuff like that, I don't mind sharing it. And that's my goal. If I can find something that seems to provide validity to it, to where I'm comfortable sharing it with the group, I'm definitely going to do so. Because again, I feel that, if I can show you guys different indicators and metrics to find within Delphian, and that helps those trades a bit better, I think that's a win-win for both of us, right? I'm helping you use the platform, and you're obviously letting the platform help you, make money as well. So that's my goal. But I haven't found, I'm trying to pull, I don't know why this is not pulling up right now for me. I think there's some chats coming in there, Josh. I don't know if you can see.
Yeah, I
that.
can.
Okay, cool.
Yeah, I know Winslow uses SMA 200, just as a broad kind of, trend indicator. We're definitely on the hunt for things that can improve these trades, any of them. But we haven't had any kind of conclusive results where we can, put information out there yet, but,
Yeah.
but we're
So just-
looking.
Yeah, and just to kind of give you an idea, this is one that I pulled up just to show you. This isn't validated, or don't take this in as gold or anything to that effect. This is something I was trying to look at the other day. So on 2/5, I think it was 2/5, so February 5th, some of these stocks were coming in as bullish runners. So we had ABC, BDX, BNY, ICE, PHPM. So I tried to look at them and say, okay, well, they had earnings coming out. I should get into the trade on 2/5. Here's their earnings per share. Their estimated is the first one. Their actual is the second one. And then I tried to look at, okay, well, now let me look at the state modeling. So if I looked at, Philip Morris, barely beat earnings, but then it looked like it was in state 2, and it almost looked like it was a state 2 reversal to where it was going to go higher. And then you look at ICE. ICE was a state 1, and it was making T3 look like it was a support. So I tried to look at those different scenarios to see, if there was some validity for it to go higher, right? But then you look at their earnings per share, 1.08 versus 1.13. That doesn't tell the entire story, because again, their forecasts for the next quarter or the next year could be vastly different from what they're showing in their earnings, and could be quite bullish or quite bearish. But I just wanted to try to take some of these and see, maybe what the examples were showing. So, I'm constantly trying to do that, and I hope everyone on this call is trying to do the same. Just take some of this data, see if you can make it better. One of the things we talked about is definitely, optimizing the trades, right? I feel that we've done a lot with this earnings plan, but I always feel that you can optimize them better, not only better for profitability, but better for you to be able to match them with your investment profile as well, right? I mean, we've kind of set a base. Doesn't mean it's going to match everybody. Somebody might want to risk 500 and somebody might want to risk 5,000. Hugely different in the way you might manage in and out of those trades. But needless to say, I think you can definitely optimize them certain ways. So, and you can even see like BDX, blew the earnings out of water. State 1, stop loss 1 looked like it might be support. So there's a couple of these that you can kind of see. So that's kind of what I was looking at, Bob. I don't know if that helps or adds more confusion to the set or not.
No, I think it helps, and I think trying to dig out a couple of metrics. I'll give you an example. One of the ones I found that was visually helpful was 14-day trend along the same lines. 30-day trend along the same lines as an indicator that's readily available on any charting package is 14-day rate of change. And because I was working on bullish pre-runners, I think we're all aware that if a bullish pre-runner is going to be successful, at some point in time, let's say on the average 14 days before earnings, it's probably going to pick up its rate of change. So, and I'm mentioning this only as an example of one of the several metrics that we might try to home in on as a group to, as you say, tweak these trades a bit. I genuinely believe that win rate is the fundamental metric, particularly for the bullish pre-runners, which is all I've done so far. But I think there are other metrics that would help me decide whether to take a trade or not.
Right. Yeah. And I agree. And like even with the 90% or more win rate, right? You're talking, I think you said maybe around 60 trades. I mean, 60 trades for a quarter is a lot of trades, right? You're talking about 20 trades a month. That's a decent amount of trades for anyone to do. So I've always been an advocate that if you can get that 60 down to whatever the number is for you, I think you might be able to optimize them better. Agreed, like you mentioned before, you might miss some in there that were real big winners. You might miss some that are losers. That's just kind of the nature of the beast, right? But getting that down to a manageable group is key, right? Because if you take the bullish pre-runners as a whole, we're talking about 100 and probably 60 or 100 and something odd trades, which is a lot for one quarter. So yeah, finding some of those metrics, I think, just as to your point, is key.
Hey, Shawn, Dan here.
Hey, Dan.
Hi, how you doing? Question on the vol crush trades.
Yes, sir.
I was thinking about, and I just started looking into it before I put a trade on. I look at the IV rank. Have you ever looked at that indicator?
I do, yeah. I have it a little bit. The IV percentile on the stock, the IV rank, and then the implied volatility. Yeah.
Yeah.
So you're looking at the IV rank specifically?
Yeah, well, yeah, that's one of the things that I'm looking at to see if there's a good increase in the volatility, coming in. To me, it's just one more thing to gauge the possibility of a successful trade if I see that IV rank going up.
Going up, right? Yeah, and I agree. I think that's a huge one too, right? I mean, we don't talk about it as much, but I mean that's really where that volatility crush trade is coming from, is that implied volatility or that IV rank being higher and the implied volatility being higher versus its relative. I mean, that's where you're going to get the most value of the coming out of those options if they don't meet the expectations for the earnings announcement.
Yeah, what I was playing around with this morning is trying to tweak that IV rank indicator in the look back period. Because it comes pretty much the default is a 1 year look back, and I shortened it up to as short as 30 days. Just to see how the sensitivity of it, over the short duration compared to the long duration. So I'm playing with that right now. So if I come up with any magic here, I'll let you guys know.
Yeah,
That makes a lot of sense to me.
Yeah, no, I don't disagree. I think it's great because you can see it. I mean, I'm just talking about implied volatility on some of these where I track like Tesla, and you could always, Tesla's an easy one to see it, right here, you could see that's just the implied volatility. One day for the Jan 29s, it was 220. Then the next day it was cut in, not half, but 80% to 135.
Yeah.
That's implied volatility. So I'm sure that IV rank had a decent change as well, right? I don't know what it was, but it would be interesting to track it and see how it had moved.
Yeah, cool.
So yeah, and I mean, you can see in some of these it's not as big, but I mean, you can see for Alibaba 62%, versus versus 45. So it did drop what 20 points, so 20 points off the 6, so about 30%, right?
Yeah.
Which is a decent drop when you're looking at a relative drop in implied volatility. In my mind, not as big as obviously a Tesla, but still pretty big, right?
Yeah, yeah.
Yeah, I make a comment towards Dan's thesis there on, implied volatility rank there, IB rank. One thing that I've been playing around with is when IV rank is like low is like in the 10 single digits level sometimes, which usually occurs a few weeks after earnings. I've been looking at using time trades to get into a situation where I'm buying volatility when it's low and having a long trade that ends up being after the next earnings expiration. With the idea, my idea here is, and it's by the way, it's been working out fairly well, but I can't get a consistent formula per se. But the idea is to have a long call initiated when IB rank is the lowest, and sell short calls against it to cut down on the overall price of the long call. And you can do it as a neutral. You can do it as if you're biased bullish, you can do out of the money calendars or diagonals. But the whole idea is get into a long call when it's the cheapest and try to sell volatility against that with the intention of having an open long call during the next earnings period before you get to the before you get to the 14 or 15 days out that I think Bob was alluding to. Because when you start getting in at 14, 15 days out, you're pretty much going to be paying pretty much for that long call. You're expecting the IV to still go up and maybe the price to go up, but you're paying a lot for it. So I'm trying to think about a way to get in early and not pay a lot for that long call, or to be able to decrease the price of that long call over time. So that idea has been working out, but you have to kind of know your stock that you're trying to do this with and have some idea with its behavior and relative value, so that you don't get caught, whipsawed by short calls that with high with volatility spikes in between when you put that first trade on and your next expiration for earnings. So
Yeah, I agree with that, Dave. I was looking at that as well. Post earnings, and you said a key thing. I believe you really have to be familiar with the stock, and how it what its characteristics are. Because a lot of times you'll find a stock that kind of repeats itself before and after earnings. And if you use that IV rank, and if it's you see where it drops down, yeah, that's a great time. I think it's a good signal to look at getting in, because you're buying it cheap.
And if you know your stock, you kind of, or if think you know your stock, you should have a better idea of how it's reacting in these times where nobody's got data on it. Like the comment that I think Bob made just a little while ago is looking for an indicator you can apply to a class of stocks or an index or a group that can consistently find overbought. Well, overbought under, that's, when analysts don't have any information, companies aren't giving forward guidance, the analysts are reaching for ideas to justify their price targets. I would warn against trying to find a single indicator that would work across a class of stocks at this point in time, until we start getting to, we're out of the pandemic and we have real data on, what airlines are going to be operating at and what travel is going to be and what hotels are going to be and so forth. Right now we're shooting in the dark a lot, so keep that in mind.
Yeah, and like you said too, I mean, buying you can. There's a bunch of videos out there, not news, but literature out there that talks about that, right? Buying when IV's low and then selling when your IV's high, right? Because it makes sense. But like Dave said, you want to make sure you're finding, those trades and trying to test, within Delphian some of those trades to make sure that historically it's worked out that way. Because if you're buying a further out of the money call when IV's kind of low, and then you're selling these shorter term calls to collect a premium, remember you're selling calls with low IV too, so you're not getting as much of a credit. So making sure that you're balancing that risk out, or that potential risk if it does shoot up in the near term, that you're not taking a bigger loss. And again, that's where going back in time in my mind and using the virtual portfolio and seeing a stock maybe that has low IV, that has made a big jump in the interim, and putting in that type of trade to test it, because you'll be able to see, hey, I thought maybe I was going to lose 200, but in actuality, when Apple jumped up in price, I lost 2,000. What changed? And you can test that without, risking your money. So it's hard sometimes to figure out those strategies and try to find the stock that matches the good and the bad on them. But I think it's crucial to be able to do that, so you can get an idea of, where your risk lies, so you're not caught off guard if the unexpected does happen. But that's some good trades. I mean, I think Josh can correct me if I'm wrong, but like some diagonals and things like that, you can really use strategies like that where you're buying it when the IV is kind of low and see if it moves in the right direction. So those are great trades.
Yeah, definitely. Those are a little tougher to test in the system.
Right. Yeah, you got a multiple strat. You got to put certain ones together to do it. So it was
yeah, but the virtual portfolio is a great place to walk through it and do it, on stocks. And I'm a big advocate of, like I used to be an advisor, and there's one guy, he only traded Oracle. He didn't like that's all he followed, and he knew everything about it. And he priced dips like, all right, let's buy Oracle. It dropped down, it's on support here. So he'd only trade that one stock. I'm not saying focus on one stock, but you should have stocks. If that's kind of what you're looking to do, I'd find stocks like that you kind of can understand how they move, because all of them are going to move a little different, but I'm sure there's some out there that you can be like, oh, this one all makes sense to me. Start virtual trading it, and then once you're comfortable, you can put real money on it.
That's the art in trading.
That's right. That's right. So yeah, and then above and beyond that, those earnings trades, just keep looking at the plan, taking a look at it. If you want help setting some stuff up in the virtual portfolio, feel free to reach out to me. Like I said, we're kind of in the middle, so we still have a lot of those bullish pre-runners still coming out. I feel there's still a bunch of great trades there. That hedging portion I think would be a great tool to use right now with the market where it is. Some of these bearish pre-runners or these bearish runners, I have kind of intertwined in my personal account. One, because I like the earnings trades and the validity of what we've back tested on them, but two, if I can have some puts in there in a market environment like this, it kind of helps me. I'm not hedged, but it does help me make a little money if the market does sell off a little bit, right? So I think looking at those two is probably key right now as well. And then also, kind of keep coming over to the Delphian studies. Don't forget about these. These seems to be, these seem to be a little bit lost in translation because we've been talking about the earnings stuff, but we still do have the Delphian studies coming out. A lot of these are looking really good, especially the breakout ones based on the fact that a lot of stocks are at some highs and breaking to new highs and pushing higher. So a lot of these stocks are kind of following that trend. Somebody mentioned earlier to look at the seasonality. So what I'm going to do is I'm going to prepare some stuff for next week, but I'll go over the seasonality stuff next week, and we can talk about, using the butterflies on the seasonality trades. Again, those are some really good trades to do some of these iron butterfly trades, low risk, decent reward, depending on how you're setting that up. And those trades are shorter term trades. I mean, we're talking about, getting in now with options that expire next Friday. So, you're in the trade less than 7 to 10 trading days. So some really good trades there, thanks to Sudhir to bringing that to light in the past to us. And I've been using it, but I'll go over that next week. So, I'll get some stuff set up. Other than that, that's all I had. I appreciate you guys providing your feedback again, Bob. I appreciate you sharing the data with us so we can share it with the group. And, I know there's other people on the call as well that have been using the bullish pre-runners or some of the other strategies as well with the earnings or with the studies. And, I definitely don't want to be biased, with using the system and using these trades that Josh and I had come up with, or with, Bob's information or with Sudhir. So if anybody else has been following these trades and you don't mind me sharing the updates with the group, send me an email if you can with your update on there, and I'll share it with the group. If you want to stay anonymous, you can do that. And if you don't want to share the information, I appreciate that as well. But I don't want to be biased again. And the more information I can share with the group, the more collaboration I think we can put together, I think the better we will become, as traders, as investors, and I think that'll help Delphian become better as well. So, I appreciate you guys taking the time.
Hey, Shawn, Dan here. Before you go, one question. I haven't been getting the emails for the earnings alerts, the daily alerts. Is that working, or if I'm just wondering if I did something wrong that
you should be getting them. Are you getting them in the daily? Have you looked in the daily alert here as well to see if you're getting the daily alerts pop up?
I get the daily. I didn't look at the daily alerts, but I mean, I can get them at after you guys post them just by going into the earnings alert.
Yeah.
But I don't get the email.
Yeah, the email should be coming out at 10. It came out today at 10 a.m. Eastern time for the pre-alert email, just saying, hey, there's trades for today. The only thing I could think, and Josh might be able to help me out with this, would be in the earnings under the pre-alert, or I'm sorry, under the calendar. I think excuse me, I say calendar, but the plan, the earnings plan, as long as you've selected those alerts, right, Josh? That's what we have to do?
Yeah, correct. I see he's not getting the emails. So when you're on the list, so you get that Q4 2020 earnings. So when you select it like Shawn did there, then you have to go up to that notify alert
Yeah.
and
I
then
did that.
and select, all those and then click out. And then
Okay, that's what I did. And yeah, you just click outside the box after you're done collecting.
Yeah,
Selecting.
and they're all on that side?
Yeah.
Okay, all right. We'll have
and
to.
then click out of there. I think you got to hit save.
Then hit
Okay.
save. Yeah.
Okay,
Okay. I'll do it again today just to double.
Yeah, I was checking the emails and I don't see you on there.
Yeah.
I can also make sure. Oh, okay, I got it. You're you're a d.arnold1@cox.net.
Yeah.
Yeah, okay. Some reason it's bouncing off here, so I can go in and change that.
so it looks like it's set up right. It just that HubSpot is the provider we use to send the emails out. So maybe they just had it set as bounce for some reason. But
Yeah.
check it in the morning though at 10 tomorrow morning if you don't mind, and then if you don't mind letting Josh or I know, or both of us know if you got it at 10, because it should come out at pretty much 10 on the spot tomorrow morning.
Yeah. Okay.
How about the studies? Have you been receiving the studies emails as well?
No.
Okay, so that we might want to, we'll look at that one too.
Yeah.
So those should come out in the evening time. So tonight, 6-ish or so Eastern time. But the other one's definitely tomorrow morning at 10. Those should come out for the earnings.
Okay. Cool.
Yeah,
Sorry about that.
I'll try and resolve this. I don't.
Hey, Josh, I noticed that you did the notify alert and there was 2 that came up. And when I did it on mine, I didn't have anything. So I don't know if it's something we have to set or is it something going to be automatic like you were showing?
Say that again.
So right here,
Yeah, like if they're on move them over. Yeah, so if they're over there, you got to select which ones you want and then move them over
so I
Okay.
typically,
with the arrows.
and then you just select it this way with this arrow and it
Yeah.
moves it.
Yeah. And you can see it's, yeah, then you just click off. So then you should get them all.
Okay.
Yeah.
Was that this?
If you have problems, let me, just let us know.
Yeah, definitely. If you're not seeing those emails, the 10 a.m. email for the earnings and then the evening email for the studies, please shoot us an email or let us know so we can make sure we get that corrected. Because those are ones definitely that kind of say, hey, we got some trade ideas here waiting for you. Please check it out. So then we always know that there's some stuff coming in. I mean, we know the earnings stuff is pretty much going to be daily because we're in the middle of the season. The studies are a little bit less active as we'd seen. The breakout just had one for today, or one for today. So some days there might not be any of the studies because just the way the market movement, those indicators are. But for the earnings, we definitely should be getting those at 10 in the morning, 10 a.m. So please let us know if you're not getting those. So yeah, other than that, again, I appreciate your time, guys. So feel free to email me if you have any questions, if you want to go over anything, within the virtual portfolio, I can help you set some of that stuff up. Feel free. And other than that, I'll talk to you guys either next week or sooner.
Okay. Yep. Thank you, everyone.
Thank you.
Thanks, guys. Thank you.